So once we understand the business, the next step is understanding the finances, where we get into the numbers. Obviously, this is very number heavy and does require an accounting background to understand the different segments that you look at. But generally, I'm looking at the company's financial position in terms of debt, how solvent they are, their capital structure, and whether they can meet their payments, the company's growth profile, their profitability, and again, where they have areas for improvement. A lot of this, as you would imagine, does really boil down to analyzing the financial statements, the income statement, which tells you how the company performed in the given year in terms of accounting earnings, the balance sheet, which gives you the snapshot of what the company owns and what they owe, as well as the cash flow statement, which is similar to the income statement, but shows you where cash is actually moving within the business, not just accounting earnings and accounting costs, where money was actually spent and earned. Now, I typically start by calculating a bunch of cumulative average growth rates, which I'll throw out the formula for, but I'll do this formula over a 5, 10, or 15-year period to get an idea of what the average growth rate over these periods are for revenues and profit measures. I also really like common size financial statements where you put everything as a percentage of a key figure. So for the income statement, that's revenue. For the balance sheet, that's total assets. And this is a great way to look from year to year to see what costs are getting bigger, which ones are getting smaller relative to the amount of total money that the company is earning.